Hey everyone, John and Ray here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we're taking a look at the S&P 500, the good old ES, right? The last couple days we've had nothing but like 6-point days. Yesterday we finally had a big move on news at 10 o'clock that got things jumping to around what I would consider normal, around 21 points of movement on the day. Coming into today, looks like we're kind of back to the same, a little bit of a wider range, but for the most part, even right now, we've only pushed about 10 points. We're seeing a lot of back and forth movement, and every time we saw the market push into the highs of this little range here, it got slammed right back down, and every time it tried to push into the lows, it got popped right back up. Big range-bound movement that may even try to go with some of the earlier potential highs like this, and form a slightly wider range. So the anticipation we're coming in here is that we're dealing with a range and we need to be looking to buy low, sell high, stay out of the middle, right? Now, we don't start until 8 o'clock, so we missed a lot of this early morning movement. Seems to be the case lately. The European session is having all the fun. But we had a little bit of a failure off of the lows. They failed to trap the bottom down here. They tried turning up. They pulled back again, and they failed again, and then turned up with a bull engulfing candle, completely dominating the buy side, showing that the buyers are going to make another run at the highs of the range and failing off of the lows, and that adds a lot of emphasis for a buy side move to continue back up. So a beautiful range fade off of the lows. It is buying a little bit towards the middle of the range, which can be a little bit challenging, but as long as the context fits well, you should be okay. In this case, going over the context, we have the previous swing low down here that is forming a little bit of a twin reversal with a 2-candle distance gap. A 2-candle distance gap basically meaning that it took 2 candles before it completed that overall twin reversal. And when the market came back, guess where it found support, right? Another twin reversal and more support. So we're showing that that could be the potential range low, and this dip down was nothing more than just a trap. So when it starts turning back up again, that looks really good for a possible range low bounce and a turn higher at that point in time. So a beautiful bounce back up towards the highs. We get to the highs, they break out of the top, assumably on a range day. Breakouts, especially on big giant bull candles like that, are going to be a failure. Nobody has any faith in those huge moves because it doesn't make sense to. Why would they? None of the other ones have worked. Why am I going to believe this one? So that offers up a nice selling opportunity to drive the market right back down again. Again, at that point in time, we're still looking at this as the possible lows of the range, but we did end up breaking down quite aggressively to the overall low close. Now, that low close is an important area for one big reason. A lot of sellers, given the overall trend of this is down, a lot of sellers will have been building into positions all night, right? They're going to be selling on the way down here. Pull back, sell that. Trap high, sell that too. Sell everything all the way down until eventually they're going to get caught selling the lows. So when they're finally given a chance to sell more, it pulls back, they sell the highs, pulls back again, they sell the highs again, they sell more. It comes down to allow them out at break even on their initial position, but at a huge profit target here, and here, they're going to start exiting, and that allows the market to bounce there and a beautiful buying opportunity to push the market right back up again. So that's the main reason why I'm looking for that area as an area of confluence to push higher, and it makes a lot of sense. A lot of the sellers that have been building in all night are going to try to get out there, and they were able to. That caused a beautiful bounce right back up again towards the highs. Once again, huge bull breakout. Absolutely no faith in that breakout. Pushes it right back down for another selling opportunity. Now, in this case, it actually found support off of a major level that we were talking about in the Outlook newsletter at 62.5, 62.75. And it got a little bit stuck there. And that stuck that they found allowed the market to push up one more time. Again, another high, and now we have a 3-push wedge top. Big bull breakout. Likely not going to succeed, and a twin reversal right back down. You guessed it, that is another selling opportunity to push the market back down again. So heavy range-bound movement today, and really just it shows the importance of needing to keep the context of the situation in mind. We have a range day. Don't get caught up in the trends, but understand where earlier trend traders may have been to give you some clues on where you may find some good entries and maybe some good exits. So hopefully you learned something, hopefully you found it interesting, maybe a little bit useful, and we'll see y'all next time.